Hello, everyone. Thank you so much for joining me. My name is Roz with Done Right Bookkeeping Services. I appreciate you taking the time to view this video. If you're viewing from Facebook, go ahead and like and comment and follow the Done Right Bookkeeping Services Facebook page. If you're viewing from LinkedIn, go ahead and like and comment, and let's connect as well. So if we're not connected, let's connect. And if you're viewing from YouTube, go ahead and like and comment and subscribe to the YouTube channel. So what I do on a weekly basis is share different strategies and tips for small business owners to help them navigate the bookkeeping process. So some business owners decide to do their bookkeeping on their own. So I want to make sure that they're doing it correctly. For one, just giving some strategies and tips, and to make it easier. And if they decide to hand off the bookkeeping task, your girl is right here. But I wanted to share, these different strategies and tips with small business owners so they can understand and help them navigate the bookkeeping process, right? So I actually have a presentation to share with you. So let me go ahead and share. And we're going to be talking about the balance sheet account. So I've done other videos, and what I'm doing is breaking down different accounts. I'm breaking down the chart of accounts, different videos for different strategies to help navigate this bookkeeping process. So know thy numbers is very important, right? My disclaimer: we are not financial advisors or tax experts. So always seek out, if you have specific tax questions or you need a financial advisors, definitely seek out professionals for that. What I do is make sure transactions that small business owners have is allocated, categorized, the reports are run, everything is accurate. That's my responsibility. So this chart you're going to see very often. And if you want this chart to help you navigate how to record transactions, there's going to be a link in the description area wherever you're viewing this from, and you can grab this. This is my gift to you. So when you're sitting down doing your bookkeeping, you want to make sure, am I categorizing, am I allocating these expenses to the correct account? It's very important because that determines if the reports are going to be correct when you run them, and what's, if you're in profit or if you're in loss. We want to know, you definitely want to know that as a small business owner. So we have what's called double entry accounting, or you may hear double entry bookkeeping. It must balance. So every entry must balance. In this formula, assets equals liabilities plus equity, this is where or these three things is going to basically determine where your transactions is going to fall. So if it's marketing, if it's payroll, if it's a truck expense, whatever it may be, it's going to fall somewhere within these categories. So the balance sheet. So it's a report. I have some things that's highlighted in red, and that means it's very important because this is going to differentiate between a different report. So as of a particular point in time for a company's financial status. So when you run a balance sheet report, it's going to be as of XYZ date. That's going to, determine what the balance, your balance sheet, that's what you're running, is going to ask you as of what date. It could be as of today. What's the balance in my company? Must understand assets, liabilities, and equity. Because once you get, if you're not familiar with it, once you get these, it becomes less of a hassle, and Plus, when in your business, so certain things are so routine that when you set up your chart of accounts, it's going to be so much easier or simpler for you to be able to navigate everything. Assets is what the company owns, and is equal to the liabilities and or the equities. So remember that formula: assets equals liabilities plus equity. We have to remember that formula. So these are some of the formats that the report is running, depending on where you are in the world. So it's called report in here in the US. Financial position report is basically international, right? Different, it shows differently, but it's still considered basically a balance sheet. You know, it's going to have these different as of a particular point in time. Is going to show you that information. It's going to show you the assets, liabilities, and equity, and things like that. Also here in the US, we have what's called account format. You may hear that term still, but it's not as common any longer. Current assets. These are the different accounts that's on the balance sheet. So current assets, what are they? Their company is what the company owns, OWNS, and expects to use within 12 months. It could be inventory. It could be cash in the checking, cash in the savings, cash in hand, accounts receivable. That's all what the company owns. And then what's long-term assets? Is a lifespan more than 12 months. It could be furniture. It could be vehicles. It could be equipment and buildings. Those are long-term assets. They may have some, normally it has some depreciation that's attached to it. That's an additional way for you to know if it's a long-term asset. Current liabilities tracks everything a company owes, OWES, over the next 12 months. What can those be? It could be accounts payable, which you actually need to pay out. It could be an invoice that you received in as a business owner, so you need to pay that. So accounts payable. Interest, because that's a liability. That's sitting on the books as something that you owe. Interest payable. Credit cards payable, accrued payroll taxes, sales tax collected. So those are things that needs to be paid out. Those are liabilities. Long-term liabilities. It tracks everything the company owes over a period longer than 12 months. It could be notes payable. It could be loans payable. Okay. Equity account. It tracks claims against the company by the owners. It could be retained earnings and capital and drawing. Company stock. You may ask, like, what's drawing? Basically, what the maybe it's a contribution that a business owner made to the business itself. They put, maybe they put $10,000 into the business. That's part of the equity account. So I always like to leave you with a quote. The actions of men and women are the best interpreters of their thoughts. So I remember this saying, action speaks louder than words, right? The actions of men and women are the best interpreters of their thoughts. So what you're doing is, like, people are not, many people are not looking at what or hearing what people are saying. They're watching what they're doing, and your thoughts, your actions are going to come from whatever, you're thinking of, many times when you're trying to grow, when you have this vision for your business, your thought process, your vision for your business, and the actions that you put in place to grow the business. So if you're ready to automate your financial task and increase profits, let's connect. You can actually contact me. I'm actually going to stop sharing real quick, and I'm going to put my you can actually hop on my 15-minute calendar, right? I actually have a free consultation that I offer small business owners to learn what their business is about and how I can assist them. So definitely that's going to be in the description area as well if you decide to schedule a consultation. But I want to thank you so much for joining me. God bless, and I wish you much success. Bye-bye.